Master your mindset. 6 steps to trading success. Welcome to this guide on mastering a winning trader's mindset. Whether you're starting your trading journey or looking to refine your approach, developing the right mindset is critical for long-term success. Today, we'll walk you through 6 clear, actionable steps designed to transform how you think, react, and operate as a trader. Let's dive in. Trading is more than just strategies and technical analysis. The mental game plays a huge role in how you handle successes, failures, and everything in between. Think of it this way. Even with the best strategies, poor mental discipline can lead to impulsive decisions, emotional trading, or overconfidence. Successful traders consistently exhibit clarity, patience, and emotional resilience. They know that their mindset is what separates success from failure, especially in volatile markets. These 6 steps encapsulate the habits and psychological adjustments you need to develop in order to trade with confidence and purpose. Clarity is the foundation of a winning mindset. Without clearly defined goals, it's easy to get lost in the chaos of the markets. So what does goal setting for a trader look like? First, establish your long-term vision. Is trading a hobby, a supplemental income stream, or a full-time career goal for you? Once you know your ultimate aim, break it down into short-term actionable milestones. For example, you might set weekly profitability targets or aim to improve on metrics like your win rate or trade consistency. The key here is measurability. Set goals that you can break down into numbers or trackable behaviors. This will help you evaluate whether you're progressing or need to adjust your plans. Remember, the best traders focus on goals related to processes, not just profits. Concentrate on improving your analysis skills, maintaining discipline, or refining specific strategies. Trading is an emotional roller coaster, and how you handle losses and wins will dictate your long-term success. Emotional resilience means staying calm and collected, regardless of market outcomes. Many aspiring traders make the mistake of letting emotions drive their decisions. When a trade goes south, they panic and overreact. On the other hand, after a few wins, they let overconfidence cloud their judgment, leading to poor decisions. The solution? Accept that losses are inevitable. Even the best traders in the world take losses. What separates pros from amateurs is their ability to learn and move forward without lingering on past trades. Develop mechanisms to regulate stress, such as taking short breaks after highly emotional trades, following predefined risk limits, or practicing mindfulness techniques like breathing exercises. When you can approach each trade with emotional stability, you'll begin to see the markets more objectively, and that's when clear opportunities start to emerge. Patience is a trader's superpower. One of the most common reasons traders fail is because they rush into trades that don't meet their criteria. They feel the need to always be active, mistaking frequency of trading for productivity. In reality, it's the quality of your trades that counts, not how often you trade. Waiting for a high-probability setup is often more effective than making several impulsive moves. This ability to sit on the sidelines and wait for the right opportunity takes discipline, but it's what separates the amateurs from the professionals. Patience also comes into play when managing trades. For instance, staying in a profitable position as planned instead of taking profits early out of fear is another sign of a patient trader. By focusing on timing and allowing trades to develop according to your strategy, you give yourself the best chance of achieving your targets. Remember, in trading, sometimes doing nothing is the smartest decision you can make. The financial markets are dynamic, evolving systems. What worked wonderfully yesterday may not be effective tomorrow. This is why continuous learning and adaptability are non-negotiable traits for successful traders. Lifelong learning doesn't mean overloading yourself with information, but rather focusing on consistent growth. Read books on trading psychology, follow reputable market analysts, take courses, and most importantly, learn from your own trading experiences. Review your trades regularly and document what worked, what didn't, and why. Adaptability is equally important. Markets respond to news, economic trends, and global events, which means rigid strategies can quickly lead to failure. Be open to evolving your approach to match current conditions. For instance, during low volatility periods, you might switch to shorter time frames. In high volatility conditions, you may prioritize wider stops or different trading setups. Staying curious and flexible keeps you ahead of the curve and ensures you're always in the position to capitalize on opportunities. Great traders don't rely on luck. They rely on discipline and consistent routines. Discipline ensures you stick to your trading plan, whether that's following your risk management rules, avoiding unnecessary trades, or taking only those setups that meet your criteria. A daily trading routine helps foster this discipline. Start each day by setting aside time for a pre-market analysis. Review global market news, economic calendars, and your watch list of assets. During the trading session, stick to your plan. Avoid the temptation to jump into trades that aren't part of your strategy. Also, make journaling a habit. Track every trade you make, noting the reasons behind it and how it performed. Over time, this log will become a valuable tool for identifying patterns in your behavior and areas for improvement. Consistency doesn't just build discipline, it builds trust in yourself, which is critical for tackling emotional and psychological challenges. Confidence is essential in trading, but there's a fine line between confidence and arrogance. Confidence means trusting your analysis, strategies, and instincts. Arrogance, on the other hand, blinds you to potential mistakes and new opportunities for learning. To maintain this balance, start by trusting the process, not just outcomes. Even if you take a loss, if you followed your strategy correctly, you should remain confident in your approach. Be humble enough to recognize mistakes, evaluate them objectively, and integrate the lessons learned into your trading routine. Confidence also grows when you build a solid trading foundation. This includes backtesting strategies, keeping a journal, and learning continuously. The more prepared you are, the more confident you'll feel without slipping into the arrogance trap. The best traders find the perfect balance by combining self-assurance with a commitment to lifelong improvement. Despite your best efforts, there are mental and emotional barriers that can hold you back. Let's address some of the most common pitfalls. Fear of failure. This can lead to hesitation or overanalysis, causing you to miss opportunities. Develop confidence by focusing on process-oriented goals, not just outcomes. Overconfidence. After a few wins, it can be tempting to take unnecessary risks. Avoid this by sticking to your rules regardless of recent successes. Self-doubt and analysis paralysis. Overthinking can be just as harmful as impulsiveness. Simplify your strategies and trust your preparation. By confronting these barriers head-on, you can shift your mindset toward achieving consistency and calm in your trading approach. It's always inspiring to look at the journeys of successful traders who mastered their mindset. Many of the world's best traders, from Warren Buffett to Paul Tudor Jones, emphasize the importance of patience, discipline, and emotional control in their success stories. For example, take Richard Dennis, the legendary trader who emphasized processes over outcomes via his turtle traders experiment. His lesson? Consistency and mindset matter more than talent alone. Such stories remind us that success is achievable when we focus on the right habits and psychological adjustments. Building a winning mindset doesn't happen overnight, and maintaining it requires daily effort. Here are a few actionable tips to keep your growth on track. Practice mindfulness. Activities like meditation or journaling can help you manage stress and maintain focus during challenging moments. Reward yourself for discipline, not just profits. Celebrate sticking to your trading plans rather than just monetary success. Leverage community and mentorship. Surround yourself with like-minded traders who can provide support, learning opportunities, and accountability. The more consistent you are in your habits, the more naturally this mindset will become part of your trading identity. Developing a winning trader's mindset is a cornerstone of trading success. By following these 6 steps, setting clear goals, building emotional resilience, cultivating patience, committing to lifelong learning, maintaining discipline, and balancing confidence with humility, you'll set yourself apart from the average trader. Remember, it's a journey, not a one-time fix. Start today by making small, intentional changes to your routine and mindset, and over time, you'll see the transformative effects on your trading outcomes. Now it's your turn. What step will you take toward building a winning trader's mindset? Let us know in the comments below, and don't forget to like and subscribe for more insights designed to elevate your trading skills. See you in the next video.